Hey everyone, welcome to the KE Report, another daily editorial as we are chatting with Joel Elconin, co-host of the PreMarket Prep Show. Check out the PreMarket Prep website, which we will link to in the show notes. Joel, look, markets in the US, this broad-based rally continues. We're at the end of the year. It's going to be another good year for the S&P. Right now the S&P is up, I believe, well over 20%. 27% I'm seeing just this year. And at the end of this year, it's not being led by just a select few stocks like the Mag 7. It is that broad based rally. Joel, what do you take away from this rally where it seems like a lot of different sectors joining into the party?
Ho ho ho! Welcome, guys, or thanks for having me on this Friday. I mean, you just have a scenario here where everything's perfect. They wanted a change in the administration. You got the change in the administration coming. The market seems to be, ignoring, the threats of tariffs or the impacts of tariffs. Coming into an earnings season where a lot of expectations have been met. Retailers are now coming out with some good numbers. The consumer is still spending. This is when, you just kind of throw your hands up in the air and you say, why didn't I buy every single dip that ever came across my screen? But we all know that, the market, the fickle finger of Wall Street likes to inflict the most pain on people at the most extreme times. So I think you got to be cautious up here, and but on the other hand, don't be too cautious.
Yeah, Joel, like people say, don't fight the markets. This is one of those times where it's kind of in a Goldilocks zone, and it's kind of that honeymoon of the Trump trade where we don't know what the actual policies will do next year once his administration takes effect. But for right now, seems like a melt up market and almost across the board. I want to hone in a little bit on what you mentioned there about the retail stocks. They did have a lot of good earnings recently, and it does show some strength in consumer. Any companies' earnings reports really stick out to you?
Oh, I mean, just some of these stocks. I mean, just looking at today, Lululemon. I mean, look at this stock. Earlier in the year, it was down to the 220, 230 level. I guess you guys are still buying your yoga pants, but just a big turnaround. I mean, it actually got down to a reasonable valuation at that level. Ulta from today, people are using makeup again. I mean, that once again got down to a reasonable valuation. Everyone seems to be going to Walmart, nowhere else. I mean, that's had a big move. It's the haves and the have-nots in the retailers. Five Below has a good report, starting to leak a little bit off that. But, in the retail sector, I mean, people are still spending money. You just hope it's at the stores and the stocks that you own.
Joel, we were hearing so much about how debt was building up, credit card debt. The consumer was going to be having trouble keeping up with inflation. What happened to that narrative? It seems like the consumer is still out there spending a lot of money.
They are. I mean, along with inflation, wages have increased, right? And when wages increase, people have more money. But also, people are getting rich from Bitcoin, right? I mean, well, they don't sell it, right? Because that's the thing. You got to hold them. But there's been a lot of wealth. I think I heard something that been more wealth created in like the 25 to 45 age range in like the last 6 months or since the election that you've had, probably in any period of time. So maybe those holders are taking a little bit off and spending it, but rates have stabilized, starting to head lower. That burdens the debt a little bit more, so you're making more money. You have a little bit less debt, and you're making tons of money in Bitcoin. You got to go out and spend it.
Yeah, like Bitcoin over $101,000 as we record this today on Friday. It's quite a close of the week, all-time highs. And I guess those people that are holding on for dear life to their crypto are taking a little bit of profits and spending it on their life with the retail and just the consumer spending. That also begs the question, where is this recession we've been waiting for about 2.5 years now, Joel? We keep hearing that the economic data is weakening, and then even 6 months ago or 8 months ago, people that had not been concerned suddenly were concerned that, oh boy, we really are going to see a recession. Are we never going to get this recession we've been waiting on it for years?
I mean, I was kind of hands off on that. You guys know you've been listening to me and talking to me every week. The eyeball test here didn't really indicate that there was a strong recession coming. So no, right now rates are starting to turn in a favorable way. You don't see it until it smacks you across the face. I mean, maybe we already had that recession, right? I mean, now we're coming out of it. Now we're at the recovery point. So right now, I mean, unless you get some major geopolitical circumstances or inflation starts to come back, and maybe that could be our next subject. The Fed is, poised to take rates down another quarter point here next week, or at the next Fed meeting. But you do have inflation data coming out, so if you do get a sticky CPI, I mean, it's getting harder, right? We've done the easy part. We've come down from the high levels. But if it starts to get sticky or starts to inch up higher, then they'll stick with their quarter point at their next meeting, but they might not give an outlook that the investors want moving forward.
So, Joel, just circling back to the markets, one thing we've been talking about is this run that the market's been on. 2 years now of over 20% returns in the S&P. Some people point to the fact that, look, the S&P since inception returns on average about 10% a year. But again, that's a average over a very long period of time. And I was going back year over year to see what some of the returns were. And quite frankly, we have seen a number of times where the S&P has run for a number of years, 3, 4, 5 years of some very impressive gains. Do you put any credence in the argument that we've had 2 good years? They've been so good that next year can not be that good.
No, I don't ever. I mean, I think if there's anything you've learned and invested in this market, over the years or even since COVID, you can never say never to the circumstances. I mean, you've seen what some of these stocks have done, some of the valuations that things have gotten to. Like I said before, the market does like to inflict the most amount of pain on people. But right now, the pain trade is out of style. I mean, people are making money in the markets, and they will continue to do so until you either get a whiff of, like I said, of the inflation, or some other geopolitical circumstance comes up. So it's pretty much as simple as that. The trend is your friend until it's interrupted, and right now the trend's higher.
Well, and even the laggard stocks that we talked about, it seems like all year with you, the small caps, the IWM, and even the mid caps, they finally kicked in the afterburners recently. So what do you make of the market, just the breadth spreading out into so many different areas of the market now?
That's what we wanted, right? That's what we were talking about. We were talking about, the improved breadth in the markets, and you've got it. I mean, if you look at the runway here for the small caps, approaching those levels that you haven't seen since 2021, 2022. I mean, maybe the rally's just getting started in those. So you wanted to improve breadth. You still have some of the big boys picking up the slack. Apple just busting out earlier in the week, making a new all-time high. The AI trade, Nvidia stalled certainly a little bit. Microsoft was on rough footing, but that seems to be moving back up. Amazon trading at new all-time highs. Google fighting off all the regulatory threats. That's been on a nice rebound. Meta making a new all-time high today by a nice margin. Your Tesla, when your buddies with the president, that kind of tends to help your stock. Another thing that's been helping the Tesla trade, and this is something my partner on PreMarket Prep has really been all over, it's been that where the street has been positioned on Tesla, they've been very negative on Tesla, many sell ratings and very dire outlooks. And now a lot of the bumps over the last week or so are analysts saying, hey, I got to play catch up here. And they're raising their price targets. They're up in the ratings, and the bots love the run with that. Financials. I mean, you were looking for Trump stocks. You think Trump's going to be bad for the big banks, for the financials? No, they've had a nice run after the election. So the Trump trade, continuing, your big caps, your small caps, your mid caps, even your kneecaps are rallying. I mean, who's being left out?
Nobody. Very few sectors are being left out. It's a good market out there. So, Joel, need to ask, what could throw it on its head? I know that we have inflation data coming up.
Yeah.
Is that the only thing, at least in the near term, that you see that could be an issue?
Man, if Trump starts getting a lot of he picked a lot of people that weren't. Yeah, I think he almost picked the people because he knew they weren't going to get accepted, and he had other people in the wings, to pick up the slack. But if he starts having trouble implementing all the policies that he says he's going to implement, if the more liberal part of the Republican Party is not, they did lose both the House and the Senate. But if you don't know what your conservative or your liberal Republicans are going to do. So, yeah, he got elected. But now, in the White House, implementing these things is much different, easier said than done. Let's put it that way.
What if the Fed does not cut, but actually just pauses in December? What do you think that would do?
Oh, Katie, bar the door. Yep. The market will not take to that at all. They got to deliver a quarter. There's two scenarios where the market would tank. The first scenario is they don't go a quarter. The second scenario is they go a quarter, but they're like, don't be expecting as much in 2025. But you know what? Jerome's pretty good at this. He's been doing this for a while. He probably won't come out, and just say, well, we're doing a quarter and we still may do another quarter, but, we're data dependent. So a lot of different factors there. But right now, besides, the lower interest rates, you're getting good earnings reports. And with the S&P trading at valuations that, are historically high, if the earnings are still coming up, then those valuations can be more justified.
Yeah, it's a good point, Joel. But I guess to that point, let's say the Fed doesn't do anything, or we do get one of these short, quick drops, almost a market reaction because it's not fitting perfectly with what I guess investors want right now. Wouldn't that just be another buy the dip opportunity?
Well, you also have money managers out there that are underinvested, right? Didn't anticipate this kind of, post-election rally. So that's what you're seeing on these retreats here. The only thing and you guys know I like to use my S&P, indicator and, looking at the futures. And besides the rollover, you are really seeing the volatility come down. And that's a good thing, right? You want the volatility. The average daily ranges are coming down. And they can do that, and they will trend. They will come down. They will come down. They will get tighter and tighter, and that just means that there's underneath demand, right, from people that aren't investing. And then the reason it's not having the big rips on the upside is there's some supply on the upside too. People are like, hey, I got to take some targets here. And my standard advice is, which I've been preaching on this show for years, is that where you at in your investing horizon? Young bucks like you guys, right? You guys got, you buy, you add your S&P fund, you diversify, you move around sectors and stuff. But if you're an old guy like me, here you are in those, nosebleed heights. While you can be getting 20% in the market, where's the risk? Where's the downside? Sometimes when you've paced your portfolio to make 6, 7, 8, 9% a year, you're missing out on some of the upside when it does the 20%. But then on the downside, when you have it down 15, 18% year, maybe you're only taking a 2 or 3% haircut. So that would be my advice to long-term and short-term investors.
Yeah, good advice, Joel. It's just one of those things. Hey, these markets just keep on going. So it's, again, that narrative. Don't fight the markets. Don't fight the trend. And, well, make money while it's available. And boy, oh boy, there has been a lot of opportunities available again this year in the markets in such a wide range of sectors. Again, Joel Elconin, co-host of the PreMarket Prep Show. Joel, it's great chatting with you as always on Friday. I hope you have a great weekend.
Okay, thank you.